I'm playing. That's not really my intro, but it's LA. You know how we do. Probably still on that spiritual journey. I here taking a sweet walk in this park. Honey, ain't too bad. Sun's out. It's a little bit low, 80s. There's a crop duster thing flying back there. It's gonna be buzzing. Man, got this new merch. Sold out already. Homie on the come up. We're gonna get to that later. To make sure I'm more presentable for my YouTube viewers. You know, I'm out here being seen. Got a nice golf course over there. People playing golf. Park side over here. There's a few folks up there. Dog park up ahead. I'm really just finna go ahead and rant about what I gotta talk about today, man. Feeling so good out here though. Yesterday was like 100 degrees with some rain. We got some chilly 80 degrees. Sun's barely out. It's a great day to go golfing. What they talking about? First thing I want to speak on is why are traders losing trades? Why isn't Forex working? So we'll go ahead, kick back, and basically tune into a little bit of what I'll call a TED Talk. Thing I want to mention, this isn't the Forex that everybody got introduced to a couple years ago, because Forex back then just meant MLM, and basically they gave Forex a bad name, and no one even understood what Forex was in the first place. TheSwagAcademy is a network marketing platform, aka LMM. It's an MLM, multi-level marketing, that as soon as you pay, you sign up, you go recruit others to join. As soon as they join the company, you get to earn residual income of up to 100,000, even more. And not that the residual income is bad, because some people ain't do shit all fucking week, just sat in their ass. They made a good couple thousands that week because they had people signed up every week, just because they had other people in their downline, in their networks, who had other people signing up and joining. And that's how they made their residuals. Thing, which I haven't mentioned yet, has to do with the actual financial markets. That's why I like to call myself a day trader, because I like to, intraday trading is a trading style that I use to analyze the markets and know how long my trade should be trading that currency pair. Say you invest into the currency market. There's stock market, all this, that market, food market. You could go trade cattle, right? Let's say you're in the currency market, and there's a AUD versus US dollar, Australian dollar versus United States dollar, Euro versus USD, Great British Pound versus the Japanese yen, or just known for GBP versus JPY. But as a trader, I'm just call it GJ. So long, I'm in this trading pair, Australian dollar versus United States dollar, AU. I get my whole technical analysis starting from the weekly time frame, seeing all the way down to the 4 hours chart, the 1 hour chart, and even the 15-minute chart. I'm using the candlestick formation, trend lines, support resistance, psychological levels of supply and demand. I see the movements as consolidation. I got on my indicators and my trading plan all set up with my Fibonacci tool that I use. I go to Discord, I go to the LiveTradingLab, and if you're not familiar with the LiveTradingLab, go ahead, check out my description. I'm gonna have a link set up and describe it all there. I'm gonna just continue on though. I post my chart, my analysis, and say, hey, I see this, I'm in the sell for AU. What do you guys think? And we're all a group of traders. They can see, and I see traders are already in the group chat talking about AU, the same currency pair in the same sell as I am. Now the entries might be a little bit different between all of us, and they start sending back their analysis, their charts, and I can see they analyze the markets a little bit different from how I have my trading strategy set up. but we're all in the same trade. So I'm like, okay, I'm not the only one that sees this move. I'm not the only one that sees this setup in the market, right? So that just gives me more confidence with my already confirmations from my analysis. Hello, so here we got a sneak peek of inside the live trading lab. We have the little signal group chat and basically the main page where people post some things, their own posts they got going on. We got signal group chats from multiple hosts in here. Here's KJ's, and that's his Instagram account. That's Shaolin Profits. He got a little analyst. Got a GU analysis here that we'll just kind of preview.
I was so busy talking to you guys about UCAD, I totally forgot to send this out. At least sending it out.
But yeah, and then you just go in, you review it on your own. They do a very good job of updating what I want to call, I guess, events is what they have it in here. Really just straight shooting on vacation. So long, I'm in this trading pair. Australian dollar versus United States dollar, AU. Crazy thing is though, we all lose this trade. We all lose this trade. So how is it that multiple traders who've been trading for X amount of years, we all lose this trade? How are we still losing trades even as a collaborative collective team? And really it's a simple answer that I've learned recently. Big banks, institutions, liquidity, volume. Us Forex traders are not the only ones in the markets. Just like you shareholders who invest into Apple, Tesla, or Walmart, even Netflix stocks, you're not the only ones who are holding shares. The banks come in to these markets with enough liquidity to move the trading pair of AU/USD into their favor. They can see the setups that some of us traders are in. They can see entries. Some can even see your take profits, your stop losses. They say, okay, we're going to come into this market and trade against you. Trading against retail traders. Us Forex traders are not the only ones in the markets. Just like you shareholders that are invested into Apple, Tesla, Walmart, or even Netflix stocks, you guys are not the only ones holding shares. The banks come into the market with enough liquidity to actually move the market and the price of your. It's how you can have a whole chart set up with all your analysis, all your confirmations, and still lose because you don't control the market. That's why no one is 100%. No one's 100% in these financial markets. I'm like, okay, I'm aware of this trading style called institutionalized trading, which basically have to do with order blocks, imbalances, healthy price action versus manipulation, and just being able to identify all those and some more. How you could trade with or against the banks, with or against the market trends, and more. Most people understand support and resistance lines, right? The price keep hitting a certain point and bouncing to that point and not breaking below, that's a support. And the reverse will be resistance. But support and resistance isn't a part of institutionalized trading. It's basically standard trading, which I would like to call it, because it has its own name. But it's basically how everyone's gonna get taught to if you learned anything about Forex. It's kind of the standard way of how to view the market. I personally like to trade both styles of institutionalized and trading styles. I have a firm grip on both fundamental and technical analysis, and I really got it down to a core I'm learning right now about imbalances and how these big banks, institutional banks affects the markets and how they play when they want to come in the markets and create their movements. All that matters. But my trouble is now. It's not my risk management, right? I come in, I could lose a good $60. What if y'all could see this thing in the air? Maybe it is this hole. Hey, it's somewhere up there though. This is in screen. Come in this mud. It's not my risk management. My risk management is alright, as I could lose $60 and still be able to come back next week and trade and feel comfortable with my trading plan that I have set up, my own trading strategies. So it's not like I lose too much in these markets, because I could afford to lose, just like I could afford to be profitable. And I have good psychology on it about how mental I am about my live money in my trading account. So forth, gotta understand why you lost that trade. If you truly took the time to go on the chart it out, get your analysis, get your confirmations, and then put in a trade, you gotta know why you lost that trade. You gotta know why it went the other way. If that's what the outcome of it. If you won and you profited, you already got your analysis to back up that answer. You go right back to your chart and show right where you got that setup for the trade is at. I try to do this all scripted too, man. I wrote down the script, got out here, just recorded it. It was all one thought until I got out here and tried to do it. But I found some shade. Hopefully y'all can still listen as I'm doing multi-apps. Big bling on them. What they talking about? So what's troubling me now? What is troubling me now is how as a retail trader can thrive consistently and profitably throughout next week, this week, as markets about to open up in less than 30 minutes. At around 3:30. It's about to open up around 4 for me, 4 p.m. Central Time. I don't know how I can thrive consistently and profitably through that week with my risk management. I probably won't risk enough that I won't have enough in my trading account to trade for the rest of the month or next month. But I like to take it week by week. From market open on Sunday 4 p.m. Central Time to market close Friday at 4 p.m. My trading pairs I'm going to be trading at, I'm looking at AU, GU, and now GJ as my 3 pairs instead of GU being that 3rd pair of the week. I like to set up my analysis before the market opens up so that as the week just goes on, all week I could just go in and see recent price action from the 4-hour to the 1-hour and 15-minute chart. I really don't like to use a 5-minute or anything less than the 15 minutes time frame unless I'm looking to enter immediately, because I probably won't look at those charts because you can get a good enough entry on the 15, but once you get quicker than that, the market just starts playing mind games on you. You can't view it how I like to view it. It jumps, it moves, and it can just make you get jumpy and excited. And I gotta work on my patience. So I don't want to tap into market psychosis too much. And that's a state where you're staring at the market too much to the point you can't actually accurately read the chart as you should. You can't read the chart correctly. How this shit look reversed, that's crazy. But I made this video to put an emphasis on institutionalized trading. Big bank take little bank. And quoted from KJ, rob the everyday traders before they go left. Rob the everyday traders before things go left. They come in, wipe out everybody's stop loss, and then let the market go back to less volatility to keep traders trading. Sometimes you can Literally look at the market, see the volume, the manipulation. Institutional banks, they come in, wipe out everybody's stop loss, and then they let the market go back to less volatility to keep traders trading. Sometimes you can literally look at the market and see the volume, the manipulation in the candlesticks, and see, okay, there's a lot of buying and selling going on at this price level. Consolidation. Patience. Patience can be key in this moment. Calm your head, wait for a pullback, a retest, or an official order block to come into play. Know if you're trading with the trend, against the trend. Are the big liquidity providers going to come in and reverse the markets? Take a step back in the time frame you're using. Go back to the 4 hour, the daily, weekly, even if you got to. What's highs and lows are not being broken? What has price reached these levels before? Firstly, and stated lastly, what is your trading plan? What days are you trading? Mostly every trader has their own trading strategies. What indicators are you using? How much are you risking? How are you reading price actions, EMA, RSI, Fibonacci tool? What are your stop loss and take profits? What days are the markets making movements? Let's say entries and risk to reward levels. How long are you going to hold that trade for? A couple hours, give or take, all day, until the next New York session, until market close on Friday, or even hold on to next week until it hits your take profit, since as a swing trader at that point, you probably got your stop loss and profit, meaning it's a win-win trade. How will the impact of fear with recession, housing, food, and other markets affect your currency pair? Just leave on that note. My name's LA Maskey, folks, no ski mask, and I truly thank y'all for tuning in. If you like the discussion we had so far, please do me a favor, like and subscribe, as it do help out a lot. I will be active in the comments, and more videos are soon to come. Markets open up here soon today. I hope you all have a blessed and life-improving week. LA out.